G'day folks, welcome back to another update for natural gas. Now the price has been hugging the rising trend line that we've drawn some time ago, so still bullish movement on the natural gas price and the ETFs. Before you go any further, make sure you hit that like and subscribe button to support the channel. In terms of the outlook, as of today, February 15, increased demand, severe winter storms affecting approximately 80 million people across the US have led to a surge in heating demand, pushing natural gas futures to a 2-year high. Supply concerns, despite recent increases in drilling activity, with US energy firms adding oil and gas rigs for the third consecutive week, the total rig count remains lower than the same period last year, intensifying supply concerns. For ETF performance, leveraged natural gas ETFs such as ProShares Ultra Bloomberg Natural Gas (BOIL) have seen significant gains, with BOIL's price currently at 74.05. reflecting a 4.8% increase from the previous close. Conversely, inverse ETFs like ProShares Ultra Short Bloomberg Natural Gas (KOLD) have experienced declines, with KOLD's price 26.45 down 4.82%. AI data center demand. The rapid expansion of AI data centers is projected to substantially increase natural gas consumption. Analysts estimate that by 2028, AI could account for about 19% of data center power demand, potentially adding up to 8.5 billion cubic feet per day of natural gas demand in the latter half of the decade. So first, looking at the natural gas price on the monthly, weekly and daily. And for those new to the channel, these indicators are all in the description below should you wish to learn how to draw them on your own charting software. So on the monthly, first off, the CCI is broken above the moving average, giving us a bullish signal. Likewise on the price chart. Now there's no divergence to talk about here. The CCI is moving in line with the price, so that's a normal situation. On the weekly, we've got a fresh breakout on the upside, a bullish movement on the weekly CCI. You can see there a nicely big bullish candle as well on the price chart as well. So bullish movement on the weekly. As well, bullish movement on the daily. So again, broken above. Depending on what time frame you're trading, if you're trading the daily, then always follow the higher time frame, the weekly and or the monthly, to be more confident of success. Sometimes we have false breaks. You can see here, for example, that gave you a false signal, but depending on which time frame you're trading. So at the moment, we're going long. In situations like this, you'll notice when it's hovering, the CCI is moving sideways. The band of moving averages, that's a consolidation primarily, so just be aware of that. You'd like to see it move in one smooth period like it is back here. It looks like it's doing that at the moment, so carefully going long during this period. This is a cautious area to trade. On the intraday charts, again, we've got the daily here as a reference. As I said, when you're trading on the lower time frame, trade in the direction of the higher time frame. So the daily's bullish, so we take long trades only. So going back from this period, and you would have ideally traded when that broke above the price on the price moving averages, and that was around this period back here. So take long entries, and that would have been again a false break. That again going long on that one there. Yeah, when it broke above there, and close it out when the CCI breaks into that moving average band. In that point there, it's about a 2.1% gain in 13 hours of trade. Avoid going long or short during this period, because remember we're only going long, and then take it further upside and bullish movement according to the CCI and the price movement here. Now in this example here, for example, you would have taken a long position on that one. You might have got out on that with a small gain, a very small gain, 2-point gain, then got in again on that arrow, on that candle, or if you held it, and you would have got out on that candle there. That was a 3.1% gain in 16 hours of trade, and so on. Now notice here as well, we've got a bullish movement on the price, higher highs on the price versus lower highs on the CCI. That's a bearish divergence. So let me just clean this up a bit. What we look at is a potential Fibonacci reversal. So we go from that high, we'll take it back to the previous low. You can see there it's already touched that 23.38% minimum retrace level. That's a minimum retrace. It's already touched that with those wicks. Now that could actually bounce further from there and hug it and come closer towards this ascending trend line, or you can see here on the 1 hour chart the CCI is still dropping, so we're very likely going to see it fall into this range in the coming opening hours of trade once the trading period starts next week. So what we've got for BOIL on the monthly, it's below its moving averages on the price chart, giving us a bearish signal. There's no CCI drawn for it on that one, so I'll just assume that's a bearish momentum, as you can see. On the weekly, however, we've got this bullish divergence, higher lows on the CCI versus lower lows on the price, and that's ever so slowly making its way higher, so that's a positive, and I'd like to see these moving average bands widen in the coming days and weeks. On the daily, it's also bullish, above the CCI band, but also above the very narrow moving average range of the price chart. Notice it's approaching this resistance at 80.01, which we hit previously. Let me just expand that, and you can see the pattern there. It was a bullish, a support level down here at 35.98. It bounced off that a couple of times, and it's now coming close to this resistance again. Again, bullish movement on the CCI, which is positive if you're trading on the intraday. If we go to the intraday charts, again going long only, and you would have gone long from this period. Now notice here we had a bearish divergence, a double top almost on the CCI versus slightly higher highs on the price. That dropped, hit our 23-38% target range of the Fibonacci. If we draw a Fibonacci I'll draw it from that to that low, that's at 23-38% level, and more than 90% of the time it reaches this minimum level. Sometimes it falls right through, other times it bounces, a lot of the time it bounces out of that range like it did here. So almost a perfect reversal on that, and you would have gone long on that candle there. So let's just draw a little quick measurement tool. Long on that where the CCI breaks higher, and you would have closed it out when that CCI broke into that moving average range. So that was a 4.6% gain in 11 hours of trade. A false break on that one, on that candle. Now, because it hasn't broken below, it depends where you put your stop loss. I like to put it below the red line on the moving average band on the CCI. You would have kept that position open, and you would have closed out. So you would have gone long on that candle, and you would have closed it out at the bottom of that candle if you held it out until the CCI broke into that moving average range. A 2.8% gain in 11 hours of trade. And lastly, you would have been another entry there, and at the moment you're still, actually you would have closed it out with probably still opening actually, because it hasn't broken below the moving average band, so still an open trade on that one. So a couple of small little trades, but again, a bean adds up to fill the sack. That's what you want to do, just keep adding to your profits no matter how small they are. So for KOLD, it's fallen below all time frames, the monthly, weekly and daily. It's in a bearish mode. On the monthly, it's broken below the moving average band on the price chart. On the weekly, likewise, it's broken well below the moving average band of both the price and the CCI, and that's after this bullish divergence. We had a bullish divergence back here. The price broke higher, and as I've said, I'd like to see this moving average band widen, which it did back here after being breached, and that's where you would have started going long during this period on the weekly. Now, since then, it's been fluctuating above and below the moving average band, but it's finally broken below the moving average band on both the price and the CCI, giving us a bearish momentum. On the daily, after hitting this resistance up here at 85.10 a couple of times, it actually hit it a few times, it's finally broken down and bounced off this support at 27.80, and it's finally breached that support and broken below. So at the moment, the CCI is also broken below the moving average band, giving us a bearish signal. So it looks like we might have more downside to go on KOLD. If we go to the intraday charts, this is the daily as a reference, again taking short trades only. You can see there more closely. We did break lower, bounced up, hit this support again. This is the 1 hour chart, and at the moment it's showing a very slight bullish move on the CCI. Although I wouldn't be going long, the price is still below its moving averages, so I'd like to see this break a lot higher, but also the price break a lot higher to be more confident of being bullish, but especially the daily, I'd like to see that break higher as well. So for UNG on the monthly, it's actually broke into that moving average range of the price chart, giving us a more positive, slight bullish movement. On the CCI, it was a very narrow moving average range, and it's broken above that. So again, very minor bullish movement on the monthly. On the weekly, we did have this bullish divergence, higher lows on the CCI versus lower lows on the price, and the price is still rising. That's a positive. So again, you can see that moving average range widen, and the CCI is also above its moving average range, giving us a bullish signal on the weekly. On the daily, it's actually hit this resistance again a second time more recently, and we've got some level of resistance there, obviously, so just be cautious. The CCI is giving us a bullish movement. It's above its moving averages, and so is the price. So again, just cautiously going long, but I'd like to see this break through that resistance to be more positive. If you go to the intraday charts and we look for any bearish divergence, so again going long in accordance with the daily, you could probably argue that's a bearish divergence, even though it's kind of very narrow, and sometimes these narrow ones are more dangerous in terms of price movement. I find usually the very narrow, that wasn't a divergence there. These very narrow divergence bands have a lot more significant impact in terms of price movement, as opposed to these longer periods of divergence. I'm just trying to find a bullish or bearish divergence that's very narrow. That wasn't one. Yep. Okay. Anyway, you get the idea. So if they're very narrow, yeah, that wasn't one either. So anyway, you get the idea. So these narrow ones can be very dramatic in terms of the way the price moves. So just be cautious. This may actually break down pretty strongly when the market opens. So again, cautiously, probably avoid going long at this point until we see the price break through this resistance on the daily at least. And I'd like to see this this divergence especially to be invalidated. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page, where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again, and see you in the next video.